Eric Muather with another educational video. This time we're going to be taking a look at Xerox XRX. We are using the long-term monthly chart, even though you can use this analysis in any type of stock that you're looking at or any type of market situation. I'm just using this as an example so that we can try and understand how we can trade an extended bull market as of mid 2014, that being in September. So we are seeing lots of situations where the market could be telling us some stocks are at extreme levels and more than likely they're going to be pulling back. So we are going to be discussing some of the things to look at whenever you're looking for turnaround situations. Now on this chart you might see some white lines. Ignore those lines for now. They're there on the chart so that I don't forget some of the things I wanted us to discuss. So long-term monthly chart for Xerox. Let's begin with the highs. You can see there was a major move from the early 90s all the way to 1999, and this was consistent with the great run in the market in the same time period. Now I want to talk about the high because the high did give us a sell signal that has been successful even down the road, and so we are going to go and find where the break took place. So there was a trend line there on the RSI, and that trend line corresponds with that high somewhere there. Hope that makes sense. And so that was a trend line break. Draw a straight line from that level, from the break point, and the line should come somewhere around there. Why is that relevant? Because now if you use uniformity, and I have lots of videos on YouTube about that, so uniformity, you'll see that the exact high in the stock comes when it fails to make a higher high on the RSI, as you can see, a lower low on the RSI, and yet it made a monthly closing high or a fresh monthly closing high. But you can see that it failed exactly at the previous breakpoint. The breakpoint is this blue line right there, and that was the high. Now we come back years down the road from this high here, and you can see in late 04 we touched the same line, which happens to be a short-term high for Xerox, and a pullback lower. We come again and touch the same line. We have uniform activity above the line and back below it. That's why I call that uniformity, which makes this a major high. And that was also true because the stock came from about $16, $17 all the way to about $2, $3 in 09. And so what we are getting at here is recently we went above the line and back below it there, which was a short-term high. Since then the stock has moved back above the blue line, making it a short-term buy signal. Now the one thing we have to be careful is over time, if we end up forming something like that, which would be uniform activity above the line and back below it, then even this becomes a short-term high. So we have to watch that, because right now the way it's looking, it looks like it is about to turn around, and probably over the next month or so could have uniform activity above the line and back below it. So watch this over the next couple of weeks, because the way it's looking like it's forming uniformity. So that's one reason why I think something is developing here in terms of Xerox. Now let's go to another observation, and you can use this on a lot of charts. You can take the low here, draw a straight line connecting that low through here. You can see that line is confirmed because it becomes resistance years down the road there, which is this high and this high. Extend the same line and you can see it is still back test area. So something like that. You can see we even stalled around here with uniform action above the line, back below it, which made that a short-term high. And so now what I am saying is if we have uniform activity back below the line, then that becomes confirmation that around here at about $13.50, $14 is going to be a major high. So that's one view, the back test of this long-term line. Let's go to another view. Let's go to the price, and you see that if you take the lows, extend it, there was a break there, extend the same line, you see it became resistance here, and also at that point extend the same line, and you can see that without any adjustment, this is where it seems to be stalling. So that's another view. Let's take a look at another view. Another view is to test the previous breakpoint in the price channel. So there was a break of that channel there with big drop. So that channel break can also draw a straight line from the break, and you can see exactly where it ends up is what could be around these levels, $14, where that would also be resistance. So let's use the stock's history also to tell us when to be careful for a massive plunge. You can see the biggest drop on this chart is here. That corresponds with a break of this trend line right there. So which is this period, this plunge period there. And so what we do is, because we know this led to a serious sell signal, we draw a straight line from that point. And ever since then, every time the stock has uniform activity to the line and back below it, it becomes a short-term high. Uniform activity and back below it there, short-term high. You can see that finally there was also another trend break around the same level on the blue line. So both line, this line corresponds with that line on the lows. So that was another break signal there, which led to the most recent plunge in price. And it became resistance again in late 2010, which was this high. And ever since we moved above that line, it has become support. So that line is very critical for the stock. In fact, you can see that this is a period when it's been moving higher from this level at about $8 or so all the way to about 14. So what I'm getting at here is, as long as it's holding above this line, we might get pullbacks, but they're not going to be major. I would suggest that down the road, whenever it breaks this level, is when it's going to be ready for a massive plunge. Not yet, right now. Now let's take a look at the other flip side of when the stock was doing good. So of course we know that on hindsight, this has been the most successful period in the stock. Took the stock from about $3 all the way to $55 in about 7 years or so. So we know that the entry level was when it broke out there, which corresponds with this entry. Draw a straight line, and you can see this has given us long-term entry into the stock. There was a move above the line there, which corresponds to that short-term entry level. That was not very successful, but finally we come back and form uniform activity below the line back above it, and also a breakout of this trend line there, connecting that high and the next high. So this was the perfect entry level, late 02. Since then, every time the stock has recaptured that same line, so we're talking about this line again, every time it recaptures it, it has a nice run. There was an entry level there. It held support here, which is this period, and since then it's moved up, corresponding with another break above the previous RSI highs on the monthly. So that period led to this entry to about $6 and change, all the way to the current price of about 14. So right now I'm looking at this as possible short situation that around this level the stock could stall, but the big sell in the stock is gonna come at some point if and when it breaks below what has been critical level. That's gonna be the secondary sell signal. Primary sell signal on the monthly is when it breaks below that line right there, as we've discussed at the beginning. Take a look at this one. Watch out for a reversal lower, especially if it cannot break above this resistance line at about $14. Eric Moore, good luck, peace, and blessings. Woo!